Hello, everyone, and thank you for taking the time to review the Morgan Hill Real Estate Market Analysis for November of 2008. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California, a member of the National Association of Realtors, and a certified ePro. And I'm also the president and CEO of Whitelaw & Sons Real Estate Services, serving all of Silicon Valley. Let's go ahead and jump right in to the supply and demand numbers for Morgan Hill. First, we're going to go ahead and take a look at the inventory numbers. Now, as you can see, these have increased on a year-to-year basis, but unlike last month, it hasn't been as dramatic an increase as we've seen. In fact, it's almost flat, which is relatively good news considering the market that we're currently in. Now, last month, if you'll remember, I was estimating that we'd probably see a continued increase in inventory, a continued increase in kind of the bad numbers, just because it seemed like the recent economic downturn was sort of resetting everything. So we had started to see some recovery early in the year, and that all sort of stopped in its tracks, and we sort of went back to the same bad news at the same rate. In other words, inventory was again getting bad at the same rate it was before. Now, this is the first month where we've seen, after our economic downturn here in late mid-year, kind of evidence that things might be flattening out a little bit here in Morgan Hill. Now, we also saw a trend somewhat like this countywide, but this is a little bit more pronounced for Morgan Hill. Now, what we've got in inventory is only an increase of 1.78% from last year. That's great. That's probably one of the lowest amounts of increase we've seen in the last couple of years in year-to-year comparisons for Morgan Hill. So that's very good news. That means that we have 5 more homes on the market in Morgan Hill right now than we did last year, and that gives us a grand total of 286 homes currently on the market in Morgan Hill. Now let's go ahead and take a look at how many homes were added to the market in the month of November. This is also good news. Compared to last year, it's down. It's down 18.64%. 11 fewer homes were added to the market in Morgan Hill in 2008 in November than at the same time last year. So that's a good thing. We don't want more homes coming onto the market. And now, finally, another piece of good news: sales are up. Now, not by a dramatic amount. They're up 5.88%, and that even makes it sound better really than it is, simply because we only have 1 more home sold this year than last year. So the worst way you can describe it is flat. The best way to describe it is at least it's up by 1. So all of these numbers are actually looking kind of encouraging, with one exception here. Now sales are actually up 5.88%. That's 1 more home than last year. That's a grand total of 19 homes sold in Morgan Hill in November of 2008. The bad news here is that 14 of those homes were foreclosed or short sale homes. That means that 74%, or 3 out of 4 homes that sold in Morgan Hill in November, were foreclosure or short sale homes. Now, if you've listened to my podcast or any of my other presentations, you probably already know what short sales are, but let me just give you a quick description. A short sale is before a foreclosure, when a seller negotiates with their mortgage holder an amount that the home will be sold for that's below what the mortgage balance currently is. That's a short sale. So, in other words, 3 out of 4 of the homes sold were distressed homes, as far as it was a hardship situation. Either it was a bank trying to sell a property they'd foreclosed on, or it was a seller trying to avoid foreclosure by doing a short sale. Now, if we do the math like I like to do every month, for the ratio between the total homes in inventory and the homes that sold, it gives us 15.89 for November. Now, there's 2 ways of looking at that number. One is that we have about 15.89 months of inventory on hand. If everything was to stop, if we just sold the same number we did this month and our inventory stayed as it is, it didn't increase anymore, it would take us 15.8 months to sell off everything we have. Another way to think of it is that for every home that's selling in Morgan Hill, there are 15 to 16 homes on the market trying to get sold. So that's a pretty staggering ratio. Now, last month that number was 13. And I tend to gauge the health of a market more based on this number. So when you look at it from that perspective, these numbers aren't so great, particularly for sellers. Particularly if you're a seller who's just trying to sell your home through conventional means. You're not doing a short sale, or you're not in a foreclosure situation. These numbers clearly show that while there are buyers out there and we're seeing some increased buying activity, it tends to be focused on the deal taking, the homes that are below their historic value, because of the fact that it's a foreclosure or a short sale situation. Okay, now the county, if we compare ourselves to the county in general, their ratio is at 8.52. So they have about 8.5 months worth of inventory on hand, or about, in the county in general, has about 8 homes for everyone that sells. So we're underperforming for the county. Not great news, but Morgan Hill has sort of been the early victim in this whole market. We were hit first. We saw the downturns first. Our numbers got impacted first. So we've really, and we got hit the hardest in a lot of ways. So that's actually to be expected when compared to the county in general. Now let's go ahead and take a look at these same numbers for the past months, and we'll see if we can get any intelligence out of this based on past performance and what we're seeing now. Now, from just a month-to-month standpoint, the change from October of 2008 to November of 2008, inventory was down 12%. That's a pretty dramatic drop. That was 39 fewer homes on the market in November than in October. Now, under normal circumstances, normal circumstances meaning a market that's a little bit more balanced, a little bit more normal, where the ratio isn't so out of whack as it is now, I would call that normal for the season. We've entered the holiday season. People take their homes off of the market. That's very normal. The estimation was that we weren't going to see quite as much of that this year, simply because there were so many homes in the market that have to sell. There are lots and lots of homes that are foreclosures and REOs, foreclosures, short sales, distress type sales. So normally those homes won't go off the market. So it's interesting that there's this many coming off the market. Last year, what did we see between October and November? We definitely saw a decrease in the inventory last year. So that's normal to be expected if we use last year as a gauge at all. So what can we expect in the next month or two? Well, if we assume that the numbers from last year are going to inform our expectations for the next few months, and I don't see any reason to expect that they aren't, I think what we'll see is a decrease in inventory again. I don't think we'll see as dramatic a decrease in inventory as we did last year in December. I think there still will be a lot of folks out there who have to leave their homes on the market through December. But I think we will see the inventory ramp up in January, but I don't think we'll probably see it as much, simply because fewer folks will be taking their homes off the market for a lot of the winter and then putting them back on when it's over. I think we might see a little bit of a boost there, but probably not as much as last year. Now let's go ahead and take a look at the homes that were added to the market. Now it's relatively good news, and it's consistent good news. I like to see numbers like this where we can look back to, say, August and September and see steady trends of decrease. Now we actually have a 26.15% decrease in the number of homes added to the market between October and November. That continued a trend we've seen since the previous month. And if you sort of just look at the general trend of the homes added to the market since about July, it's been steadily going down. Now that's a good thing. That's actually fairly normal, and it's something I like to see the trends instead of just wild numbers flying around. Now, as far as sales are concerned, we actually got a fairly decent summer season this year. I think it's going to be prolonged because of a lot of folks coming out to take advantage of the lower prices on the foreclosures and the short sales. We are definitely down from last month. We're down 28% from October as far as the number of homes that have sold. That's 7 fewer homes sold this month than last month. Now, if we go ahead and take a look at the home prices that we've been seeing over the past years in the month of November, let's take a look at the sales prices. Big dips here. The average home price is down 29.7% from the same time last year. So November of 2007 to November of 2008, the average sales price is down almost 30%. And the average home price in November was $601,788. That's a dollar drop of $254,278. So, and again, this is a number that is more. This is just pertaining to homes that have sold. So what we're seeing here, I think, is more of an emphasis on homes at the lower end. So homes, some of the homes that are at the sub-average price are the ones that are seeing the most action. And these are the foreclosures. These are the short sales. And, of course, the solds data backs that up, with 75% of the homes getting sold being foreclosures and short sales. That really shows the buyers are coming out to take advantage of these lower prices that we're seeing in the marketplace. Now, let's go ahead and take a look at the median price. You can see it's almost on par with the average price here, which basically means that the spread of homes was relatively even, so there were pretty much just as many homes above the average price as below the average price that sold in the month of November. Now, the median price was $582,950. That was a drop of 26.67 from the same time last year, and that's a dollar change of $212,050. Now, the highest priced single-family residential home in Morgan Hill was on Purisima Way, and that sold for $1 million. Now, it was originally listed for $1,525,000 over 130 days ago. And back in 2007, the current owner paid $1.5 million. So that home was sold at a loss of $500,000. The lowest priced home was on Audrey Drive in Morgan Hill. Now that home sold for $190,000. And it took a long time to get this home sold. It was 427 days on the market. It was originally listed for $349,000. So basically, we're talking about over $200,000, $150,000 drop in price for that home. Unfortunate. It was a real estate owned property, and the home was purchased for $245,000 in 2005. Now, the average price per square foot in Morgan Hill for November was $278.26. That's down from last month's price per square foot on average of $283.31. Now let's go ahead and look at the same data for previous months, see if we can't see any trends that we might be able to give us some clues into where we're heading. Now, the average home price from October to November decreased 22.85%. That's a substantial drop in just a 1 month period of time. That's a dollar value drop of $178,252. Median down 16.72 for a dollar amount of $117,050. And again, that was a total of 19 homes that sold. Clearly, we can see that if you're just looking at the overall trends, obviously a decline here. Just looking across, you can see there's some ups and downs because of the small sample. Morgan Hill is a relatively small community where we have usually less than 20 homes sold in these months. Sometimes these numbers can get thrown off just by one or two properties that have an extremely high or an extremely low price, and usually what you'll see is artificial upticks simply because something that was an extremely high-end property managed to get sold. Did we see the same sort of trends last year between October and November? We did. In October of last year, we saw prices drop as we headed into November. Then we saw a little bit of an increase in December. If I'm not mistaken, for the numbers we did in December of last year, that was actually a little bit of an artificial boost in the average price because of one home that was in the particularly high end. My guess would be that this year we will see average price staying almost right where it is. Now, I don't think there's going to be a lot of variation. I think we might see average price kick up a little bit once we start to exit the winter months. But I'm not seeing anything here that indicates a big trend that we can hang our hat on for the coming months as far as what average home prices are going to be. Now, as far as the median is concerned, you can see that they've kind of closed in together. Last month, things were emphasized a little bit further below the average price. This month, things are pretty much on par, giving us sort of an average that seems a lot more accurate as far as telling us right where the midpoint was of where homes were getting sold. Now, let's go ahead and take a look at how many days it took to get these particular properties sold. Now, this is the cumulative number, so this is the real number. A lot of folks like to report that's reported two ways in the MLS system. I always give you the one that's far more realistic. Now, the days to sell is particularly high this month. It's at 103 days to get a home sold. That's an increase of 29 days from the same time last year. So between 2007 and 2008 for the month of November, we had an increase of 29 days. That's a 39.19% increase. The lowest days on market was 3 days. The highest days on market was 427. Now, to sort of give you a little perspective here, these numbers aren't really being skewed by any properties that were up, except for that one 427. Now, the next closest behind that 427 days was about 242 days. Let me just sort of break it down for you. We had one home that sold in the first week. We had 5 homes that sold in 8 to 30 days. We had 3 homes that sold in 31 to 60 days. We had 2 homes that sold in 61 to 90 days, 5 homes that sold in 91 to 180 days, and 3 homes that sold in over 180 days. So that number is being nudged up a little bit by the just amazing 427 days on the market. Probably a more realistic number, if you look at the clustering of this, is going to be probably a 90-day 85-day sort of time frame for folks, the average person, to get their home sold. But again, so much, that's if you're performing well. That's if you've got the right person out there marketing your property, you're cooperating very well with that agent and jumping through all the hoops you need to make your property as attractive as possible. So that's assuming you're doing everything you possibly can to help facilitate the home getting sold. So just keep that in mind if you're considering selling in the market we have right now. Now let's go ahead and take a look at these same numbers, just going back over previous months. We're going all the way back to August of 2007 now. You can see that there's some seasonal fluctuations. We had a big sell-off in March. Now, that's what's funny about that is that actually goes kind of along with an increase in sales. We simply just had a boost in sales that sort of took homes that had been on the market on the market for an extremely long time off the market, and that's also sort of an indicator of when we start to see the market start to turn a little bit as far as increased sales as homes that have been on the market for an extremely long time start to get sold. Do we see anything here that we can use to help us estimate where we might go? Well, between October and November, the same thing happened. We saw a decrease in the days to sell, and then we started to see an increase in December and January. I don't see any reason to doubt that. Seasonally, you'd expect it. The numbers last year support it, and I think we'll probably see the same thing happen in the coming months with probably a nice little boost once we start hitting a decent market. And it'll probably be similar to last year. My guess, though, is that because of just some of the deals that folks are able to find out there right now, we may actually see the selling market, the buyer time when the buyers are coming out, coming even a little bit earlier this year. Last year it came in around March, April. We may even see it kick in a little earlier. I think March would be a good estimation. Might even be the end of February. For those of you who want to give yourselves the absolutely best chance of getting your home sold next year, if you have to sell your home in 2009 in Morgan Hill, let me suggest that you start talking to someone to help you with this in January or February. Give yourself 30 to 90 days to get your home ready to get sold. It's a huge challenge right now, but if you have to sell in 2009, you're going to want to be ready by March 1st with your property to go on the market. Of course, that may change as we head further into 2009 and see what the numbers are for December and January. But I'd still start the process of preparing right after the New Year's to get your home ready for sale. All right. Now, I do appreciate you taking the time to listen to what I have to say on these market evaluations. If you'd like to review any of my other presentations, any of my podcasts, or any articles I've written on real estate, you can find those at www.soldbyrobert.com. If you'd like to contact me via email, do so at robert@soldbyrobert.com. Or if you'd prefer a phone call, just dial 408-852-0525. If you'd prefer to chat online, you can find me on AOL Instant Messenger, Google Talk, and Yahoo Instant Messenger with the screen name The Rebel Broker. On Skype, you can find me with screen name Rebel Broker. Of course, referrals are always appreciated. If you or anyone you know is interested in buying or selling or investing in real estate in Silicon Valley, please feel free to give me a call and contact me with any of the methods listed above. Finally, contact me for referrals anywhere in the United States. It doesn't matter if you're just looking in Santa Clara County or in New York. I can find the right agent for you. So feel free to get in touch with me, and I can refer you to the best person to meet your needs. Thanks again, and I'll talk to you all next time.